Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, filling in for Karem Rametlu today. We have a new guest to the show. You probably have heard his name, billionaire investor Frank Giustra has been kind enough to take half an hour out of his day and join us to go over topics, including the topic on many people's minds listening to this channel today, which is, of course, what's going on in the gold market and what it means for gold prices and gold equities moving forward. Frank's the chairman of the Fiore Group, which oversees a portfolio of companies. He's primarily an investor these days. We're going to go through his background a bit. He also spends much of his time these days as a philanthropist with the Giustra Foundation, and that's focused on poverty alleviation and refugee crises around the world, as well as disaster relief. Frank, I want to stop there and welcome you to the show and thank you for coming on today.
My pleasure, Colin.
Frank, I think going through your background would be very helpful for listeners. I find that a biographical kind of overview often puts context to the person that we're talking to, and also some lessons learned from your background. So before we hit record, we were going through how you got into the investment space, starting at Merrill Lynch back in 1978, and then moving over to Yorkton Securities, which was a pretty obscure boutique fund when you joined. But 16 years later, and you're the CEO and chairman of Yorkton, which is a pretty major firm at that point. Maybe you can give us a little bit of a background on how you did start in the space.
Well, yeah, as I said, I started as a trader working for Merrill Lynch, but trading on the Vancouver Stock Exchange stocks at that time. It was the Vancouver Stock Exchange in the late 70s for the entire Merrill Lynch system. And it happened to be a time when gold made its first big run, which was the 1979 to 1981 market, which took gold from $35 an ounce all the way up to $850 at its peak. Oil also had a huge run at that point. So while I was learning the business, we were in a humongous gold and oil resource bull market that lasted a couple of years, and we were trading all of the Vancouver stocks at that time. So that's how I learned the business. I was hired away by a very small firm in 1980 called Yorkton Securities. It was like a two-man operation. And again, as a junior trader at the time, working with a big broker there, and I slowly got into the deal side of the business and learning the underwriting business of junior mining stocks. And I did that for a few years. Then I moved to London, England, to open up the London office for Yorkton, and eventually moved to Zurich, opened the Zurich office and the Paris office. And I spent 7 years in Europe building the mining team, the institutional mining team for Yorkton Securities, which was very successful in the mid and late 80s. Came back to Canada in 1990. They made me president of Yorkton Securities in 1990, and a couple of years later, I became the chairman and CEO. And we, again, continued to build the mining team in Canada, in Toronto and Vancouver. And by the time I left in 1996, it was a very powerful investment banking boutique focused on the mining sector globally. And in 1996, I decided I wanted a change in life. I was turning 40, and I decided that I'd had enough of investment banking. I wanted to try something different, so I just resigned and spent the next number of months thinking about what I wanted to do next. And in November of 1997, I launched Lionsgate Entertainment. And Lionsgate, as you may know, is the world's largest independent film studio based in Los Angeles. It was started here in Vancouver. It was named after the Lionsgate Bridge here in Vancouver, and I ran that company through as chairman for years after that. It was 2003 when I finally stepped down. But when I gave up the CEO role, I was all of a sudden had a lot of time in my hands, and that was in 2001. And I started to look at the gold price, and I started to think all the reasons gold, if you remember, gold getting under $50 an ounce. It was at its absolute low, and most people had written off gold as an investment asset. The mining sector had been dead for, I think, 5 years since the Brick scandal hit in 1997. There had been no mining finance activity in Canada. It came to a grinding halt. And gold, at the same time, gold went down to its absolute low. And I made a case why gold was going to head higher. And I actually wrote an article in 2001, which I published, making my investment thesis about gold. I published it and then took my own advice and invested a lot of my money into gold bullion. And then I paused. I thought, I know a lot about mining finance. If I really believe the gold price is going higher, I should really do something about this. And that's when I came up with the Wheaton River idea. And I talked Ian Telfer into coming out of retirement, and a number of other people that were my big financial backers, like Frank Holmes and Frank Mersch and Pierre Lassonde. These are all people I'd known during my days as CEO of Yorkton. And we collectively launched Wheaton River. And Wheaton River, as you know, became Gold Corp. And it was recently acquired by Newmont. But we took Wheaton River from a standing start with no assets, only $20 million in cash. And we did that. We used our M&A skills to acquire mines, to merge with other companies. And we did this over a 5-year period from 2001, and it became one of the largest gold mining companies in the world. During those same years, the great market that lasted from 2001 to 2011, I built a number of other companies in uranium and in oil and gas, mining companies and other commodities. So that was an incredible run as a merchant banker, where I played a role of, putting these companies together, finding the assets, financing them, putting the management teams together, and helping them along. Here we are today. The reason that I wanted, you asked me what I wanted to talk about, is I want to talk about gold, because I think we're in the third and final phase of the gold boom that started in 2001. First phase started in 2001. The second one was started in 2009 after the financial crisis and after the Fed started printing money and other central banks started printing money. And the third run just started recently. And this, in my opinion, will be the biggest of all of them. This will probably be my final run in following gold and being involved. And as it turns out, it's the third time I've created a gold mining company to participate in what I believe will be the biggest bull market of all time in gold. And I started, as I mentioned, 2001 with Wheaton River. And in 2009, we launched Endeavour Mining, which was I launched with Neil Woodyer to acquire and build mines in West Africa, and it became a multi-billion-dollar company. And then we did it again. We started about 2 years ago with Lea Gold, which is focused on Latin America. I'm the chairman of Lea Gold, and that'll be how I kind of take advantage of this last big phase of the bull market in gold.
Frank, very few people make it to the level of success that you have in one field. I want to go back to 1996 and get in your head. Maybe you stepped away from the gold market, realizing that things were not going to be good for the next few years, but what possessed you to go into such a different sector as the movie business?
Well, like I said, I'd been doing the whole investment banking thing and focused on the mining sector, the resource sector, for so long. I was just tired of it, and we'd done very well. I'd personally done very, very well. I just didn't want to do that for the rest of my life. I wanted to try something different, and I'd always been a fan of movies. And what most people don't know is that I actually got involved in the movie business in the mid-'80s. In 1986, 11 years before Lionsgate was launched, I started a small company called the International Movie Group in 1986 in Los Angeles while I was still involved with Yorkton. It was kind of a side business for me, and that's how I learned the movie business. And we were in the business of acquiring the foreign rights and just to independently made films, and I did that for a good 7 years. And so by the time 1996 came along and I left Yorkton, I thought I wanted quite a bit more ambition when I started pitching people about my concept to create Lionsgate. It raised a lot of eyebrows. I don't think we had a lot of believers. A lot of people thought I was crazy, and perhaps I was. But we're raising a lot of money and putting together a team and going through a lot of very difficult times. I mean, it was not easy building Lionsgate. The first few years were very, very difficult, probably the most difficult times of my life. But we managed to get the right management in place in 2001, and they've never looked back.
Something I've often thought about in this regard, you're not the only very successful resource investor who also invests in movies. And a bit off topic, but it got me thinking in the past, is there something that a resource speculator has in common with somebody who's in the movie business? It's very much so a business where you're looking for that big hit to make up for your efforts across several ventures sometimes.
I suppose you can look at it that way, but I honestly think that the movie business attracts all sorts of wealthy people, not just from the mining sector. If you look through at the history of movie studios and production groups that are created, you'll see that throughout the years you'll get a lot of people coming from all sorts of sectors where they made a lot of money elsewhere, and they come into the movie business because they like the glamour of it. They it's a privilege to be part of certain big movies. How cool is it to be part of something that will be watched for hundreds of years, perhaps? And so it's an attractive business that attracts a lot of people that made money elsewhere and they just want to try something new that's exciting. So it's not just and I think you're probably referring to Robert Friedland with his dabbling in the movies.
Certainly one of the names that comes to mind. Yep.
Yeah. Yeah, and I can't think of anybody else off the top of my head from the resource world, but I can certainly think of a lot of people from other industries that have dabbled in the movie business.
Fair enough. Well, let's switch back to the topic today, which is gold. Frank, somebody could say over the last several years that a lot of the systematic issues were in place, unsustainable debt levels, low interest rates that would spark a gold bull market. You happen to be impeccable, at least from the outside view, at timing things, and you're gung-ho that right now is going to be the beginning of this big wave. What do you feel is different right now, aside from the actual price movement we've seen already in gold, that gives you such assurance that right now is kind of the beginning of this move?
Yeah, well, in order to answer that, let me go back and just repeat what I've been saying since 2008. Okay, when the crisis happened and the Fed had to step in, and European Central Bank had to step in to save the day, and they did it by taking interest rates to zero and then by starting to print money. The whole QE1, QE2, and QE3 eventually. Those, to me, that was the beginning of the end, and I was saying then, and I've been saying for years since in panel talks and in articles that I've written, that the Fed put itself into an inescapable trap, and that there was no way to ever unwind what they had created. They would never, and it became very clear as the years passed that the only thing they managed to do was to promote the creation of additional debt. So debt has doubled, global debt has doubled since the crisis. I don't think that was the intent, but that certainly is what they promoted. They allowed the system to go heavily, whether it's governments or corporations or private individuals, to go heavily into debt. And I kept saying it is absolutely impossible to unwind that debt. And it is going to be absolutely impossible to normalize interest rates. So whilst they were, all the talking heads over the last number of years have been talking about rising and increasing rates, normalizing rates, I said, it's mathematically impossible. You will implode the entire system. There's just too much debt. How do you think, just take the federal government alone in the United States at $21 trillion in debt and rising by $1 trillion a year, how are you going to service that debt with normalized rates? It's absolutely impossible. You're in the same trap that Japan created 30 years ago and has never been able to get out of. We are now in a situation where it's going to be forever zero interest rates. It's easy money forever, because there is no other way out. You cannot pay back that debt. That money does not exist. The only way to deal with that kind of debt is to inflate it away. And that's exactly what they're going to do. And what changed recently while people like myself have been saying this for years, the market never believed it. And the only time, the moment they started to believe it was when the Fed finally blinked. They paused a couple of years ago, and that's when I first thought it was going to take off a couple of years ago. And they for a short moment in time, they paused raising rates, and I thought, there they blinked. But then they resumed. But I said they can't do this and they certainly will never be able to take those rates past 3%. I mean, you start doing the math on what it does to, the federal debt, what it does to the Fed's own balance sheet, which they promised they were going to unwind. And there's no way. How are they going to unwind the balance sheet without jamming up interest rates? It's mathematically impossible. So now, when the Fed eventually this year said, okay, rates are no longer going up, and then once that sunk into the market, they go, okay, rates are now going down. And then all the not only are rates going down, now the conversations about additional QE are coming into place. Trump is promoting it like crazy. He's saying, he said yesterday he would like to see the Fed drop rates by 1% and introduce QE. I mean, this is the sort of pressure that's being put on the Fed. And the pressure is not only coming from the federal government, it's coming from Wall Street. Wall Street's having the party of a lifetime right now. It's been the longest bull run in history. No one wants to see that party end. So how are they going to keep it? In this entire bull market since 2008 has been driven by easy money. It hasn't been the economic recovery that's driven this market. Nothing justifies the kind of move that this market's made. So Wall Street is in a jam also. If they want to keep the party going, they're going to need lower rates. But what I maintain is that this game is over. How much lower can they take rates? Well, there's only a couple percentage points left. Then what? Well, then you start QE. Now, you're going to call it something different this time. They won't call it QE. They'll come up with another fancy name, but it'll be the same thing. It'll be money printing. And this is, to me, the final nail in the coffin. And I think that eventually the entire world is going to realize that we're going to be in a global race to the bottom with respect to interest rates, and that's going to evolve into a currency war because everybody's going to try and become more competitive by devaluing their currencies, and you've already seen that conversation start with respect to the U.S. dollar. The whole strong dollar policy that's been in place since 1995 is out the window. They can still talk about it in theory that the U.S. has a strong dollar policy, but it's gone. They've made it very clear they want a weaker dollar. And, they're blaming the Chinese and they're blaming the Europeans. But at the end of the day, this will end up in a currency war. And there's nowhere else to run when you get into a currency war and when everybody's trying to inflate away the debt. Where are you going to run to? To me, it's beyond imagination that everybody doesn't own gold at this stage. Why would you invest in anything else at this stage? There's nowhere else to run. And so, as we all know, gold, you can't inflate away gold. It's it's got a fixed supply. And so that's why you're seeing all the central banks now buying gold more and more. They're diversifying away from the U.S. dollar, and they have to do it very slowly and very carefully, especially the Chinese, who are sitting on $1.1 trillion worth of treasuries. So you've got a perfect storm of stupidity taking place around the entire world today that is and the only thing that I can see that you should be in at this point in time is gold until the dust settles. And I can spend another hour here giving you a whole bunch of other facts and figures about negative yields and everything else that is driving gold, but it really is, as Ray Dalio put it, we're seeing a paradigm shift in market behavior because what's everybody's been taking for granted has gone for far too long. They've gotten used to it. It's gotten overdone, and there's a shift that's going to take place, and a lot of people are going to get hurt because they're overextended. And so that's whether you're talking about debt or you're talking about the equity markets, everything's overextended. And when that shift takes place, it's going to be a bit of a panic. And so my take on this is when that happens, gold is going to blow through the roof. It's going to go way higher than the previous highs. It's already trading at all-time highs in a number of currencies. It's just the U.S. dollar that it's still a few $100s away from, but it's going to blow through the old high. And I think that's I want to be in gold for the next few years. This is where the only place to be.
Frank, bring us back to the 70s when there was that epic gold bull market. You're on the floor. I mean, you're seeing this firsthand. What was it like for there to be a speculative boom in these junior resource stocks? Because a lot of millennials, including myself, and people listening to this just haven't seen it before.
Yeah, you've never, okay, that was an insane time. And the stupidity that was, on display then with respect to the valuations on some of these junior mining stocks was off the charts. Now, you never hope to see that because it was really crazy. It was crazy, stupid money chasing deals with very little in asset value, but it does happen when things get very frothy. Now, we haven't seen that in many, many, many years. And I'm not quite sure how it's going to play out this time, but I will tell you this, every market climbs a wall of worry. So I think that the first phase of this market is gold itself is going higher. The major gold mining companies are moving nicely. And so that's going to continue, and then it slowly works its way down the food chain. I think the next level of opportunity will be the development companies, the companies that have assets, gold assets that are not yet in production, and where you can quantify something, making various assumptions about gold price and capex, and you can calculate IRRs, and you can assume what the construction costs are going to be, the capex, and then you can determine where the value is going to go. That's the next phase, and that hasn't really started yet. But when that will happen afterwards. You'll have obviously even the smaller gold producers, the juniors that are producing, they're starting to move, and then underneath them will be the development companies, and lastly will be the exploration companies, and that comes when I believe that will come after gold reaches new highs, not yet.
Frank, there's a few companies I've noticed that you have either started or gotten behind, and wanted to ask you about them. You started with the production side, and Leagold certainly something that you've put quite a bit of energy in. Anything that you can tell us about on the Leagold side?
Well, Leagold is, again, my third attempt, Wheaton River Gold Corp being the first one, Endeavour being the second one, and this is my third attempt to build a major gold mining company by way of acquisitions. And that's exactly, we're using the exact same formula we did in Wheaton River and that we did in Endeavour. And now it's going to be Leagold in this run. And so the idea with Leagold, which today produces approximately 400,000 ounces of gold through its various fully financed expansions and builds, it's got one expansion happening and a build of a mine happening. So the next 2 years, that's going to go from 400,000 to 700,000 an ounce. And along the way, we'll be looking at M&A opportunities. But the idea is to create a major gold mining company there and to do it mostly through acquisition and some building of mines.
Sandspring Resources is another company, and in full disclosure, a company that I'm a shareholder of. Just completed.
Congratulations.
Thank you. Just completed an oversubscribed financing. What can you tell us about Sandspring, which certainly fits in the development category?
Yeah, and it really does because, and again, that about 5 years ago, I asked our people, because I really believed we were coming to a gold market. Now, I was a bit early in believing that. It took a couple of years longer than I thought at the time. But I told my guys, find me something that fits two criteria. One, a gold asset that is highly levered to the gold price. So it might be out of the money now. This is back then when gold was about $1,050 or $1,100 an ounce. But at a different gold price, it becomes very economic and very valuable. And also the second criteria is that company had to need money. So finding a company that needs money that fits that criteria. And so we did a full analysis internally, and they came back with Sandspring. So I approached the Sandspring people, and I put in money back in 2014, I think it was. And I've been putting money in ever since, waiting for the gold price to finally come to a level, which it is now. We were always thinking when gold was 1,100, we thought at $1,400 gold, this thing starts to make sense. Now we have $1,500 gold, and so I think things will probably move a lot more quickly now than they have the last few years. But the idea was for me to have a major stake in something that would do extremely well in a good gold environment, and that's why I think I own 15% of the company or so, but that was the idea then, and it's a great asset. I mean, it's got the economics of it, have very long mine life with large production, and that's what you want to have as an asset in this environment.
As we wrap up here, you've painted a very good picture of where you see gold going and the mania that will ensue in the gold space. Do you have any thoughts on what the general equities are going to do? You're talking about this party that's been going on for years and years, and they don't want it to end. Do you think that the equities will continue to inflate up, or are we going to see some type of a crash?
Well, I think you're going to see whether you might call it a crash or you might call it a very severe correction, but there's no reason why this market shouldn't, the overall market shouldn't correct by 30-40% due to some event. And sometimes it's a surprise financial crisis of some sort caused by some institution or something that creates contagion from outside of North America. We live in a very volatile, precarious environment right now where there's so much debt out there that anything can happen. But I think just heading into a recession, which is long overdue, and they're trying to prevent a recession now by preempting it with rate cuts, but a recession will happen. You can't go forever without a recession. This has been a very, really, really long run. And a recession is the market's going to come off. It's overvalued. Markets go up, markets go down. This one is extremely overvalued, and in a very dangerous environment with debt, and in a volatile world where people are talking trade wars and currency wars, and all sorts of other kinds of wars. And so something will happen that will make this market correct, and it will be a severe correction. It'll be 30-40%. It's going to have to happen. And I'll tell you the one thing that most people don't think about because they're unaccustomed. For the last 30 years or so, we've been conditioned to believe that every time the market has a crash or a severe correction, it's a buying opportunity. Okay, I remember the 1987 crash. Everybody points to that. Well, yeah, sure, the markets came off dramatically, but look, they rebounded a year later, and you could have made a lot of money. And that's been sort of the investment thesis ever since. Market corrects like in 2008, get in there and buy because it's in the long run stocks are going to go up. What people forget is what happened between 1969 and 1982, the longest equity bear market since the 30s. Okay, for almost 13 years, the market was flat. It went up and down, but it stayed flat for 13 years until 1982. And so we are conditioned to believe that the next time a crash happens or a very severe correction happens, that all you do is buy. But I have a very strong belief that this next correction might be the beginnings of a very long bear market where you have subpar growth globally for a very, very long time. So you just have to be a bit careful, when you're looking at equities.
Well, Frank, being that I'm overweight in gold and that I am a shareholder of Sandspring, you've certainly gotten me very excited in this interview. Any parting words for our audience before I let you go?
No, not really. I just think that again, the gold mining business is a risky business, and you have to have the stomach for it, and I always encourage people to get professional advice when they're investing in gold stocks. There's a lot of, especially when things get frothy, there's a lot of junk being promoted, and you have to be very careful. And I always, because it only takes a few bad apples to kind of ruin it for, the people that are trying to do good work, that are trying to build gold mining companies. Just be careful. This is going to be a lot of fun if you want to own gold and ride this wave, but be very careful.
Excellent, Frank. Thank you so much for coming on the show with us today.
Okay, my pleasure.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?